Hello everyone. In this particular class, we are going to discuss about the amendments which are relevant for your December 21 examination. And there are, different parts. We have corporate laws, we have economic laws. If I talk about the complete subject amendments, there are very important and relevant amendments in the chapter of IBC, which I have already discussed with you. And the video link you can find, and you can reroute yourself to IBC amendments if you haven't seen them yet, because they're very important from examination point of view. And the rest of the amendments, the major amendments that you can see is of course in Companies Act as well as Fcra. Okay, so these are the two major amendments that you'll see. Apart from that, in SEBI Act, in PMLA, in FEMA, there are very slight, you can say in total it's going to take just 5 minutes and all the amendments will be done, apart from Companies Act and Fcra. So our main focus in this class is going to be Companies Act and then Fcra. When I talk about in Companies Act, again, in Companies Act you do not have any drastic amendment other than one, two, major introduction of new things, new concepts. Apart from that, the major change which has been introduced in whole of Companies Act, whether you're talking about CA inter-level or you're talking about CA final level, is the change of penalty, fines. The fine has been substituted with penalty, or the penalties have been revised, or imprisonment has been omitted. These are the changes majorly that you'll find over here. And for that, I would say often students come up to me and ask me, ma'am, is penalty important? Do I need to learn penalties? Because there are ample of penalties in Companies Act, and which is quite confusing for the students. If you ask me, I don't remember all the penalties. Of course not. I remember the important ones, but I don't remember all the penalties in Companies Act. So I know it is very difficult because it's highly confusing. Up to 50,000, minimum 50,000, maximum 50,000, right? So see, from examination perspective, earlier they did not ever ask penalties, so we could confidently tell to our students that skip penalty. But nowadays, even penalty has been asked. Sometimes 1 mark, sometimes 2 marks, sometimes with the incorporation of objective type questions, no, you can expect more of penalties. So as of now, the smart work would be that learn the penalties which have been included in the amendments part. Okay, because there are very high chances, if at all institute wants to not test our comprehension skills or our understanding of law, rather than just test whether we remember the penalty or not, if at all institute wants to do that, then institute's main focus would be to at least go for the latest and updated penalties, which you will find in this amendment class over here. Okay, so let's get going now. Okay, so in the chapter of directors, appointment and qualification of directors, one of the most important amendments is, if you remember, we have discussed about the remuneration. Now you would say, ma'am, remuneration part is not included in this particular chapter of directors. It is included in appointment and managerial remuneration and all that we have discussed, right? I agree with you, but this part is kind of interconnected, so I will discuss the whole amendment in the flow. Now, earlier, if we talk about before this particular amendment came into force, see, we are discussing the amendments up to 30th April 2021, which are relevant for the coming examination, right? So, if you talk about the previous time, what used to happen? If a company is making huge profits, if the company is earning profits, company used to pay to its directors. What does it used to pay to its director? We have two category of directors. We have executive directors, we have non-executive directors. The executive directors are nowhere defined, the non-executive directors are nowhere defined in the Act. But from the definition of executive directors, we extract out that managing director and whole-time director are executive, and other than that are non-executive directors, right? Okay, so whenever a company is making profits, it has that what remuneration has to be paid to managerial personnel, which means all the executive directors as well as managers. There are three people whose remuneration we read in Schedule 5 and everything. Managing director, whole-time director and manager, right? If you remember. Now, non-executive directors, what do they get? They get the sitting fees. Sitting fees also has a limit per board meeting, right? And apart from that, they get profit-based commission. So if the company is making good profit, then definitely company can pay commission to the non-executive directors, who include, or the category includes, independent directors also, right? Independent directors will not come in the category of executive directors, they will be non-executive directors only, right? So when the company is earning profits, great, everything is sorted. But as soon as company is not earning adequate profits or is incurring losses, we realize that now companies act as making a difference, is differentiating the executive and non-executive directors in the way that executive directors can still get remuneration and they have a certain limit that in spite of losses you can be paid up to this limit. If you want to get paid beyond that, then you have a provision of special resolution also and like things. But what about non-executive directors? Well, they do not get anything, because it is difficult for the company to pay profit-based commission when the company is not incurring profits. And if we talk about sitting fees, it already has a limit. So how the independent directors will feel motivated? Because no matter the company is not making heavy profits, still the efforts of both set of directors have to be appreciated, right? It is important that you understand that no matter the person is an independent director, not on the payroll of the company, not the employee of the company kind of, but still that person is putting in a lot of efforts, and to attract such type of directors, it is important that they also be rewarded at par with the executive director in case of losses, right? So with that thought process, this beautiful amendment has been incorporated, which tells us if a company has no profits or its profits are inadequate, an independent director may receive remuneration exclusive of any fees. So sitting fees you get, that you will still get, but if the company is not making profits, then you will also get remuneration. Now the question arises, ma'am, how will the person get remuneration? Right, the remuneration also has to be specified, how much remuneration, what is the limit, etc, etc. So for remuneration, we will switch to the topic, switch to the chapter appointment and remuneration of managerial personnel. In this, when we talk about section number 197, earlier we used to find that if there is inadequate profits, remuneration can be paid only to managerial personnel. But now this also marks an amendment in, you can say, in the loop. Earlier this was available only for these three people. Now the words or any other non-executive director, including an independent director, shall be inserted. So now the remuneration is available for non-executive directors also in case of inadequacy of profits. Again the question comes, ma'am, how much remuneration is available? How much remuneration is available? See, if I talk about these people, how their remuneration was to be calculated in accordance with Schedule 5, right? So we used to switch to Schedule 5 to check what remuneration can be paid to them. Here also we are going to do the same. See, for relevant topic I have included the chart also. Here also we are going to see the same. Schedule 5, Part 2 talks about remuneration. Part 1 was appointment, right? So Part 2 talks about remuneration. In this, Section 1, Remuneration payable by companies having profits now to other directors also. So now this remuneration can be paid to other directors also. See, whenever this amendment has been incorporated, it has to be changed at respective places. So we had some line written in section 149 that needs to be changed. In section 197 that needs to be changed. In schedule 5 section 1 part 2 section 1 that needs to be changed. Right, so just respective changes we are making. The whole concept I have already delivered to you. Section 2. Remuneration payable by companies having no profits or inadequate profit now to other directors also, but it does not has to exceed the limits under A and B. Exactly the same thing as we used to read for managerial personnel, right? So the same thing here also, it's just that the limit is different. The limit is different. The limit is different for managerial personnel and for other directors. For managerial personnel and for other directors, because obviously a managerial personnel means someone who is working in full-time capacity in that particular company. He is a whole-time director or is a managing director, so he is either handling the substantial affairs and all that, or he is dedicatedly devoting all the time he has towards the company, so he must be paid more. So he must be paid more, right? So we have yearly remuneration as it was, we have these individual limits as it was, we have on the basis of this classification of effective capital as it was, we need to calculate effective capital as we were calculating, so there is absolutely no change in all that. The difference is 60 lakhs, 12 lakhs, and all these limits you can divide by 5. 1/5. 1/5. The good way to remember. Okay. So we have the limits 12 lakhs, 17 lakhs, 24 lakhs, 24 lakhs plus 0.01% of the effective capital in excess of 250 crores. So this is the amendment which you need to remember. The limits you need to remember. Okay. So we have this particular amendment over here, over here, over here. Then in section 197, in section 149. Okay. So this also we have discussed, and here. So with respect to the remuneration of non-executive directors, which includes independent directors, this section 149, it is basically the section of independent directors only, right? So here I was discussing just about independent directors, but that does not mean that this remuneration is available only for independent directors. Okay, it is available now for all sorts of non-executive directors, including independent directors. Clear? So now they can be paid remuneration even in case of losses. How they can be paid? According to schedule 5. In schedule 5 we have to follow everything. It should be within that specified limit. It should not exceed the A and B part, right? So, and how are we going to calculate that A part? The limits have been given to us, right? Starting from 12 lakhs. Well, 17 likewise. Okay. Now, so this was one important and major amendment which you must remember. Now we have some penalties. Section 165 talks about the number of directorships. So we all know that there is a limit. We cannot be a director in 100 companies if we want to. We have a limit because even God understands that, even Companies Act understands that every person has a potential, has a caliber, and if we are overexerting ourselves, that means we will not be able to produce optimum output from that, right? So we might not be able to contribute as much as we should. So there is a limit. Okay, law limits us because law also knows how Indians are. So we have a limit and we have to be within that limit. If we accept any directorship beyond that limit, then we had a penalty. Now the penalty has been reduced. Penalty has been reduced. Earlier the penalty was 5,000. Now the penalty is only 2,000. is only 2000, and moreover there has been a maximum limit which has been placed. See, earlier the penalty was 5000 per day. So if I continue to remain the director of say more companies for 5 days, and after that I realized, okay, I have to resign, so immediately I resigned with effect from that particular day. So I remained a director of more companies for 5 days. So what will be my penalty? 5 into 5000, that is 25000. Now this could go on and on. The penalty could come out to be 5 lakh, 10 lakh, 20 lakh. There was absolutely no limit. Supposedly I don't know this provision and I continue, and after that one day I get the penalty notice of 30 lakhs. This was kind of harsh. Now this has been reduced, that first of all the penalty will be 2000 per day. Secondly, there is an upper limit also, that it cannot go beyond 2 lakhs. This can be taken, this can be used against law also. So people can take advantage of this particular situation also. Now, Section 167(2). Section 167(2), vacation of office of directors. See, we read about the disqualification of directors in Section 164, and we read about the vacation in Section 167. So we have different sections for the disqualification as well as for vacation, and we come to know what are the grounds of vacation. See, if a person attracts any of those grounds, if the director attracts any of those grounds, then he has to vacate the office. But of course we have to understand, and only we can know that what ground of disqualification has been attracted to us, so that we have to vacate office. See, you will definitely know that I am not a fit and a proper person to continue here as a director, and if you continue to be the director despite the disqualification that has already been attracted to you, then you should also be liable to a penalty, right? So in this situation, earlier the director was liable to imprisonment, minimum 1 year, and maximum 1 year, and fine, which will be minimum 1 lakh and maximum 5 lakh. Now forget all that, forget all this. Fine, which remains the same, minimum 1, maximum 5 lakhs, and imprisonment has been omitted. Imprisonment has been omitted, so the fine remains the same as before. Imprisonment omitted. Now in examination you can be asked a question that a person, knowingly that some disqualification has been attracted to him, continues to be the director of the company. He does not vacate the office of the director, and is he liable for imprisonment? So you would say no, he is not liable for imprisonment. Earlier if this question was asked to you, he was liable to imprisonment, and imprisonment can be maximum 1 year, but now he is not liable. Okay, now Section 172, the generic section, that if you incur if you contravene any provisions for which that specific section penalty has not been provided, then this is going to be the general penalty for the whole chapter of directors. So if you contravene any of the provision of the whole chapter of directors for which there is no specific punishment or specified penalty, then section 172 invokes, it applies, and according to section 172, the company or the officer, whatever the case may be, is punished. Okay. Now again this has been changed. What has been changed? The penalty on company and officer in default is 50,000. Okay, is 50,000. Earlier it was minimum 50,000, maximum 5 lakh for both company as well as officer in default. Now there is a penalty. Earlier there was a fine. Now there is a penalty. Penalty means a fixed amount. Penalty means a fixed amount. Fine has to be adjudicated. I hope you understand the difference between fine and penalty. Whenever you are seeing fine, there will be a range which has been given to you. minimum fine 50,000, maximum fine 5 lakhs. So your case will go to the adjudicating authority. Based on the circumstances, they will decide and a fine order will be generated. But when I'm talking about penalty of 50,000, so if you do that offense, straight away penalty of 50,000. So it simplifies the whole thing. So here straight away penalty of 50,000, and if you continue that failure despite that, then again 500 per day, maximum 3 lakh for company and 1 lakh for officer in default. Okay, now we have rule 6, and although I have written some part over here, I would insist you not to read this. It was only going to confuse you. What is rule 6 of the chapter of appointment and qualification of directors? A very important rule with respect to independent directors. A very important rule with respect to independent directors. Anyone who wants to be appointed as an independent director has to comply with certain things, right, which are given in rule 6, and for this I have made a chart. So I will switch to my chart and then I will try to explain you the amendments. I made this chart long back and I have made the requisite changes. If you ask me, just a second. Right. See, this is the old chart. Although you don't need it, but still I'm showing you this old chart. Please don't copy this chart. This is the old chart. Anyways, you are getting all the notes that you need, so you don't need to copy or note anything, but this is the old chart. And what are the changes? The changes have been highlighted in red, so the major changes are over here only. See, any individual, he may be the existing independent director when this rule came into picture. So if he is the existing independent director, he has 13 months to apply for his name in the institute. Now what institute? The MCA, that is Ministry of Corporate Affairs, they have notified an institute. Which institute? Indian Institute of Corporate Affairs. If you want, you can check the website also, iica.nic.in. Now this is an institute which is going to maintain a whole list of people. What list of people? The list of people who are willing and eligible to be appointed as independent director. Companies Act has made the requirement of independent directors mandatory in case of certain types of companies. Now supposedly I am a company and I cross the threshold and now I have to appoint someone as independent director. I don't know someone with great caliber and strength who can guide the company, who knows how to run this particular company, from whom I can actually get some good vision. I don't want to appoint someone just for the namesake of appointing someone as independent director. And we should not do that, right? So where do I go? For that particular purpose, government has actually a list of people. Just like we have in insolvency and bankruptcy code, we have a list of people who act as resolution professional, right? So here also we have a list of people who are going to act as independent directors, plus the government is going to be sure that we have placed a requirement of independent director that has actually been fulfilled by the company in the correct perspective as we want it to, right? So everyone, supposedly I want to be the director, I want to serve as an independent director because I have some great vision and I feel I can guide the company, etc., etc. So I want to be the independent director. So what I need to do? No company has approached me yet to be appointed as independent director. Voluntarily also, if I want, I can include my name. And if I'm already an independent director, I need to include my name. If I want to be an independent director, some company has approached me, ma'am, will you be my independent director? I said, yes, I want to be and I'm ready to be. But the point is that I need to include my name in that list. Otherwise, it will be non-compliance, right? So we apply to the institute for inclusion of our name with fees. Which institute? IICA, Indian Institute of Corporate Affairs. Now, earlier this was 1 year. So within 1 year you had to pass the self-assessment test, online self-assessment test. Now you have a time period of 2 years. So this is one amendment. Now you have a time period of 2 years. Secondly, within 2 years you had to pass online self-assessment test and the passing percentage was 60%. Now this has been reduced to 50% only. See, it is a self-assessment test. No one is going to check and like things. So it is very easy to do that. But still the passing percentage has been reduced, which is now 50%. So first change, 1 year. It was 1 year, now it's 2 years. Second change, it was 60%, now it's 50%. And the third change, earlier you get an exemption. I am already a director. I'm already a director of, say, Reliance Industries from past 15 years. Let's say, for example, I'm already a director in Reliance Industries from past 15 years, and now I am being told that I also need to pass a self-assessment test to check whether I'm eligible to be the independent director or not. Isn't it harsh on me? Of course it is. Experience is much more than you can say important than knowledge. Now this statement can be contradictory. I'm not saying that knowledge is not important. It's equally important. But yes, experience is also something. I hope you all will agree with me that no matter how much I've studied, how much degrees have I gained, how much work am I doing, I still cannot compete the level of my parents. They have some special kind of experience, and if you go to your grandparents, that is some extra level. I mean, they have a logic for everything. They'll tell you why this is happening like this, why this is rotating like this, which direction, etc, etc, etc. So you just cannot compete that level. Why? Because they have experience, and I am obviously yet to gain that experience. So experience also counts. Earlier the experience required for getting exemption from this test was 10 years. Now this has been reduced to 3 years plus. If you already have 3 years of experience of being a director or a key managerial personnel of these many companies or body corporate, then you don't need to pass that test. This list was very small. Now this list is very long. So in this list, what are the things that are covered? Listed public company. So if I have 3 years experience in any listed public company, now supposedly I am a director in Reliance Industries Limited, which is a listed public company, of course. And I also am a director in one more company which has a paid up capital of 20 crores. And I'm working in both the companies for a span of 2 years. So 2 years experience in this company and 2 years experience in this company, total comes out to be 4 years. And if I have 4 years experience, that means I don't need to pass this test. I'm exempted from the test. Yes or no? No. At one time, if I am serving as a director in 4 companies, doesn't mean my experience is going to be 1, 2, 3, 4. No, right? I hope you understand. If I have worked in this company for 2 years, then I resigned and I worked for this company in 2 years. So 2 plus 2 you can count. But at the same time, if I'm working in two companies, that means the experience is not going to be like that, right? See, if I'm doing a part-time job, in the morning shift, I work at some place, in evening, I work at some other place. I have qualified at the age of 21, say for example, I've been working for 4 years. So let's say it comes out to be 25. Can I say I have 8 years of experience? Even the employer will be surprised that how in 4 years you have 8 years of experience. I would say I'm doing part-time job. So I'm doing 2 jobs at once. Still you have 4 years of experience only, right? That is a clarification which has been given. And so listed public company, unlisted public company who had the paid up share capital of 10 crores or more, body corporate which is listed on recognized stock exchange in or in country which is a member of FATF, right? See, we have some countries which are FATF compliant countries, Financial Action Task Force, who work together on combating the issues of terrorism, PMLA, money laundering and all that, right? So they have strict laws. They don't let, they have strict laws, and you need to understand the intention of this. If I'm working as a director in any listed company, that means I'm very well aware of all the laws. I'm very well aware of the compliances. I know how to be compliant and then run a company and like things, right? So government now allows that, okay, if you are not a director of some listed body corporate, this body corporate is not listed in India, but it is listed in such a country which also believes in FATF, so which is also a member of FATF. Together they are combating all that issues, right? So if the body corporate is listed in such a country, then if you are a director of that company, then also you will be eligible. If there is a body corporate which is not in India, which is not even FATF compliant, in a country which is not even FATF compliant, but its paid up capital is more than or equal to $2 million, then also you get that, you all are exempted from the test. Now, in a way, these are good steps which have been included, because many times it happens we have a lot of brain drain from our country. So people study, they educate themselves, they develop that potential, and then they move out. So in abroad, there is some Indian who's a director, and now he wants to come back and help the companies over here. So we tell them, stop, you're not eligible to be the independent director. He's saying, I have been the director for 20 years and you're saying I'm not eligible, I need to pass some stupid test. No, you don't need to. Now you don't need to if you have just 3 years of experience, even in some body corporate which is incorporated outside India, but it should have a paid up capital of at least $2 million. Then any statutory corporations we have under the Act of Parliament or state legislature, we have PWD, MCD, like that, right? Now, if you have served as a director or above in MCA, in all those ministries, Ministry of Corporate Affairs, Ministry of Finance, Ministry of Commerce, Ministry of Heavy Industries, Ministry, and you have experience in any of these laws, corporate, security, economic. So then also you are eligible, plus, but you should have served these ministries as a post of director or above. Or if you have worked as a chief manager or above in SEBI, RBI, IRDAI, PFRDA, and you have experience in this laws, then also you are exempted from the test. Okay, now you might have applied for including your name for 1 year, 5 year, lifetime. So after your after that expiry, you have to file the application of renewal within 30 days. That is all the same things, right? So the major change is this list, this year, and this passing percentage. Clear? Great. Let's come back. So we have discussed the amendments with respect to the chapter directors, right? Appointment and qualification of directors. Okay. Now comes the next chapter, meetings of board and its powers. Meetings of board and its powers. The very first amendment is just simple penalty, section 178, which talks about the contravention of these committees. There are certain category of companies for which you require audit. There are certain category of companies in which you need to constitute audit committee, NRC, stakeholders relationship committee. If you do not do that, then there was this huge fine and all that. Now this has been replaced with penalty. The penalty comes straight to company 5 lakh, officer in default 1 lakh. The imprisonment has been removed and the fine has been substituted by penalty. Simple one. Section 184(4). Section 184(4). See, whenever board is having discussions about any agenda, it is important that the director must give the disclosure. What kind of disclosure? There are two types of disclosure: general disclosure and specific disclosure. General disclosure, which has to be given at the year beginning, and specific disclosure before the meeting. What type of disclosure? I am also a director in this company, or I have a shareholding. Wherever you have interest, that has to be disclosed. And when you disclose that interest, if supposedly the company is entering into any contract with with another company in which you have interest, then before that transaction is being discussed, you also need to give a specific disclosure. Now, why is it given? Because you may be partial, you may be biased in the decision because you have another interest apart from being the director of this company. So you are required to stay away. You cannot participate in such type of meeting wherein the discussion, wherein the agenda is related to a company in which you are interested, right? So that disclosure and all part has to be done. If the director contravenes and does not give the disclosure, then this was the punishment. Now imprisonment has been removed and straightaway penalty of 1 lakh. So fine replaced with penalty and imprisonment removed. Next, section 187 subsection 4. Investments of the company to be held in its own name. Whatever company is holding, it has to be in its own name. The company cannot do things like that I have this investment, but the investment is in the name of Mr. X, it is in the name of a director, it is in the name of the member. No, you cannot do that. Like we do in a household, right? If I want to buy something I'll buy in the name of my son, some in the name of my mother-in-law, some in the name of my husband, like things, right? The things we do in the family, that cannot be done in a company, because company is a separate legal entity. If a company, apart from certain things like nominee, shareholder, etc., that we have discussed in the question, in the course, this was the fine. Now penalty. Again, fine has been replaced with penalty. On company, it's straight away 5 lakh, and on officer in default 50,000. The imprisonment, of course, on officer in default has been removed. Okay. Now, section 188, related party transactions. See, there are some transactions which cannot be entered into without the consent of the board, and for some you require the permission of members and like that wise. Related party has been defined, and if you enter into any transaction, if a company enters into any transaction with a related party, then also necessary approvals need to be taken, right? If you don't take that necessary approvals, that amounts to contravention. Now, earlier there was one specified punishment for all types of companies, but now they have been segregated. Listed companies, straight away penalty of 25 lakhs, and other companies, straight away penalty of 5 lakhs. Okay. Earlier there was imprisonment also, and all that fine, but now the penalty has been segregated. Okay. If you want, no, you write over here. Okay, I have already written, although I have already written, see, this is a related party transaction, the contravention by director or any other person. So if any director or any employee of the company who has entered into such a contract or who has authorized such a contract, because the company won't, there will be obviously some person who is authorizing, that particular person will be liable to penalty. This penalty is not on the company. Okay. Now, next chapter, appointment and remuneration of managerial personnel. Appointment and remuneration of managerial personnel. This part is already done, and if I talk about this part, it is just contravention, secretarial audit for bigger companies. So we have secretarial audit for some specified type of companies. If the company contravenes that, we have a straightaway penalty of 2 lakh for company, for the officer in default, as well as for the company secretary. Clear? Okay. Now next chapter, compromises, arrangements and amalgamations. Compromises, arrangements and amalgamations, section number 232. And subsection 8 is of course about the contravention. And if you contravene subsection 5, if you contravene subsection 5, that is see, once we get that copy of order, within 30 days we need to file that certified copy of order, right? So with the registrar, with the ROC, if I do not file this, then there was a penalty on, or you can say fine on whom? If a transferor company or a transferee company. They're talking about merger and amalgamation, so there can be contravention. Contravenes the provisions of this section, the transferor company or the transferee company, as the case may be, shall be punishable with a fine, and every officer in default shall be punishable with imprisonment also and with fine also. Now there is a straight away penalty. The penalty is 20,000 for both company as well as the officer in default. I hope it is clear. Further penalty 1,000 per day, and maximum it can be 3 lakh. Maximum it can be 3 lakh. So simple, just again the change of penalty. Whenever a company is merging or amalgamated, see, people make an application to the tribunal. Then the copy of order is circulated, it is being decided, and the final order is being passed. The once that order is passed, it is received by the company, and the company also has to file the certified copy with ROC, right? So it's just about some non-compliance, the change of penalty, not much relevant. Then we move to the chapter of operation and mismanagement. Operation and mismanagement. Again, we have 3 change in fine or penalty, you can say. Section 242. Section 242, which talks about the powers of tribunal only. See, if the application for relief in the cases of oppression is being made to the tribunal, and the tribunal is of the opinion that yes, the company's affairs are not being managed properly and like things, they are in oppressive manner, etc., etc., then one of the power of tribunal is also the alteration of memorandum or articles. Now, if the tribunal has passed this particular order, then it has to be complied with by the company. If the company does not comply with it, if the company contravenes the same, there was imprisonment and or fine. Now, the fine remains the same as before. It's just that the imprisonment has been removed. It's just that the imprisonment has been removed. Okay. Now, of course, when we are talking about the cases of oppression, there might be some director, there might be someone who is in power, who is not discharging his duties efficiently. So, quite possible some person's office has been terminated. Some person's office has been terminated. Now he is not to be appointed in the company or some other company for the specified period. If he accepts any appointment in contravention of the same, then he is liable for imprisonment and or fine. Now again, imprisonment is removed and the fine remains the same. We had a maximum limit of fine of 5 lakhs. It is the same as before. Same as before. Now, next section, section 247. Section 247, subsection 3. How come I have written this over here? This does not come. No problem, you change this. You change this. You only need to insert one cell, or if you can understand and recall, there is no problem at all. Section 247, my dear, is about registered valuer. It is about registered valuer, right? It is about registered valuer. The registered valuer also has certain provisions to comply with. If they contravene that provisions, earlier there was a fine, minimum 25,000, maximum 1 lakh. Now it has been substituted. Straight away, penalty 50,000. Contravention or provisions of registered valuer. You write like this, you will understand. You will understand and you will remember. Okay, next we have the chapter of winding up. The chapter of winding up. Quite some amendments in the chapter of winding up also. It is a huge chapter actually. Now, pursuant to introduction of Insolvency and Bankruptcy Code, thankfully there are ample of provisions which have been removed, and moreover these are also not so relevant ones, but still it is a huge chapter, chapter number 20 of Companies Act 2013, winding up. Section 284, a very simple section I have already written over here. See, whenever a liquidator is being appointed in a company, it is the duty of the promoters, company employees, the directors, that they all have to cooperate with the liquidator. It is their duty that they must assist the liquidator, provide them information, provide them documents, etc., etc. And if they don't, they were liable for punishment. Now their punishment has been removed. That means now are we eligible to not cooperate with the liquidator? Still you have to cooperate just because of punishment. That is why it is mandatory to put punishments, because if punishment will be removed, then people will not do their own work that they must do. But now, since punishment has been removed, something needs to be incorporated. What has been incorporated? If supposedly there is a director who must have cooperated with the company liquidator, but he does not do so. So now the power has been given to liquidator. That liquidator, we are not going to punish them. You make an application to tribunal, and when tribunal receives that application, tribunal will direct the person, and of course on that direction the person will assist. That is being presumed over here, right? If you don't listen to your siblings, the siblings go to the parents and they say, see, look mama, look papa, he's not doing that, he's doing this, etc., etc. So they don't go and punish the child, they just say, do this. And it is automatically done. Likewise, the tribunal has taken the role of parents, and the liquidator and the directors have become kind of siblings. Okay, so the punishment has been removed. Now, the person will not be liable for non-cooperation. So this can again be asked in examination. Next section, section 302. Section 302, which talks about the dissolution of company by tribunal. When does dissolution happens? After winding up. So all the assets have been sold, the liabilities have been paid off. Now it's just to remove the existence of the company, that the company needs to be dissolved. No more there will be a company in the name of this, and it will be a separate legal entity and like things, right? So dissolution So when a dissolution order is passed, it has to be forwarded by the company liquidator to the registrar. Listen to me. Tribunal passes the order of liquidation and gives it to the liquidator of the company. Now liquidator, it is the duty of liquidator to give it to ROC also, because ultimately ROC is someone with the authority of maintaining all records related to companies, so ROC must know it. So it was the duty of liquidator only to forward it to ROC. Sometimes maybe liquidator doesn't forward it to ROC. That means the whole official government records with ROC will be at stake by just one omission by liquidator. Now what happens is the tribunal himself within 30 days shall forward a copy of registrar, forward the copy of order to the ROC. So now what is happening, tribunal is also forwarding the copy of order to registrar, but that does not mean now liquidator is free. Tribunal directs the liquidator also that you also file. So the tribunal is going to direct the company liquidator also to forward the copy of the order to registrar. So now this is going to be done by two people just to be for better security, better records, you can say better official records. Okay. So earlier, if the liquidator did not forward the order, he was punished under section 302 only. Now this punishment has been omitted and this has been incorporated. See, we both will share the load. Okay. Now section 347 subsection 4, disposal of books and papers. See, once the company is wound up, now the question arises, what about the books and papers? The company is no more in existence. We must discard all these books and papers, but they are being kept. Why they are being kept? Because in future there can be some related fraud which is being discovered. A company took a loan from some bank, the bank has done some fraud, we need to identify, we need to check into some papers, we need some information from the company. So although the company has been dissolved now, yet the papers need to be preserved for quite some time, right? Now this preservation, if you do not do this and you destroy, then imprisonment and or fine. Okay. See, if you talk about the disposal, it cannot happen without the permission. You need to obtain the permission. There is a proper search which happens just to be sure of the fraud, and thereafter your books and papers can be disposed of. So earlier there was imprisonment and a fine. Now imprisonment has been omitted and you just have this fine of 5 lakh, which is same as before, Section 356, power of tribunal to declare dissolution of company void. Now once the company has been dissolved, there can be instances wherein tribunal declares the same as void, and as soon as the tribunal declares that no, this particular dissolution is void, the same has to be forwarded with the registrar. Earlier there was punishment for non-filing this copy. Now again this same thing has been incorporated over here also, that the tribunal will also forward a copy and the tribunal is going to direct the company liquidator also to file a copy. Here, simple and easy ones. I told you maximum amendments are only change of penalty. Now companies incorporated outside India. Which we call as foreign companies also, if they have a place of business, some connection in India. Now, section 379, it's just that earlier there was power with the central government to exempt any kind of foreign company. Okay. That okay, you don't need to comply with this provisions. Now this proviso has been omitted. Ma'am, usually government comes up with amendments and gives more power to themselves. Now here this power has been taken away from government. No, this power has not been taken away from government. There has been new section which has been incorporated. So So instead of a proviso in this section, a new section is incorporated. The new section inserted in place of proviso to subsection to section 379(1). Here it is written that central government may exempt any foreign company which has a place of business in India, or any company which is incorporated outside India, it has no business connection in India, to comply with the provisions of this chapter by publishing notification, and it is going to be laid before both houses of parliament. Okay. So not a kind of amendment, but I would say this has been shifted over here in the form of a new section. So new section 393A has been incorporated like that. And then you have section 392, which just talks about contravention. Foreign company has to comply, and if it does not, then there was imprisonment and a fine. Imprisonment has been omitted and the fine is same as before. The fine has been reproduced over here. It is the same as before. Special courts, the chapter of special courts. Special courts can be established. Of course, it can be established, ma'am. Why not? Special courts is established for that speedy trial, because we know that the judicial process is so overburdened. Our judicial courts have been so overburdened that they do not have that adequate time to deal with the of course they deal with all the cases that come up in line, but it takes quite some time. So for specifically Companies Act, or you can say corporate law, MCA has the power, and they can designate some session courts to be the special courts, that okay, now they are going to deal with this Companies Act matters only, and if they are going to deal with only these disputes, then of course the trial will be a lot more quicker. And if I have to file a case, or if there is some proceeding, my dates would come quicker, right? Now the question is special courts may be established for offences under this act. So there was a power that special court can be established for offences under this act. That means if you have contravened, if you have not filed this, if you have not done this, if you have if you are engaged in that operation, etc., operation and mismanagement, then there is a possibility then special courts can be designated, and the trial is going to go on there. But now there has been amendment. What is the amendment? That special court can be designed or established for all the offences under the act, but except under section 452. What is section 452? I have written over here, which is punishment for wrongful withholding of property by employee. Employee of whom? Of course, when we are talking about company, we are talking about company, employee of company only. So there is a company, company's employee has some property. Property of whom? Property of company, but the employee is not returning the same. Wrongful withholding. Or maybe you were being given some property. Supposedly an employee was being given some cash, or for passing it to some person, but the person is withholding that particular cash, or the employee has been given some flat to stay because he was working in the capacity of some product manager. Now he is not vacating that particular flat. He had been given some laptop. Now he is not returning that laptop to the company. So such type of cases are being covered in section 452. Now if the company files a case on such employee for returning that particular property because the person is withholding the property wrongfully, for that we want a special court, because it is also a matter, it is also an offence which is covered in the Companies Act. So can the special court be designated over here? The answer would be no. The simple reason is that employees, they all are covered under labor laws, right? And whenever employees come into picture, we cannot see, family matters will go to family court only, right? Civil matters will go to civil court, criminal matters will go to criminal court. We cannot intermix everything, right? So this amendment has been incorporated just to explain that if the offence is with respect to section 452, then this is not exactly a corporate matter for which you need a special court. This is going to go for the labor laws, right? Labor code. So it is going to be switched over there, and there the settlement will take place. Okay. So that's why from here it has been removed. Section 446B. Section 446B. See, earlier small company and one person company. Supposedly the penalty is 50,000. The small company's penalty will only be 25,000. So there was half penalty for some specified sections for small company and one person company, just as a part of some exemption or benefit which is conferred to them. Their penalty, the quantum of penalty has also been reduced. This is already existing provision, but now this marks a change. What type of change? Penalty, liable to a penalty not more than one half. That means it will not be more than half, and maximum 2 lakh for company and maximum 1 lakh for officer in default or other person. So supposedly the penalty on a normal company is 5 lakh, on one person company in this case comes out to be half. That comes out to be 2,50,000. So not more than this amount, but the maximum is already 2 lakh. So the maximum 2 lakh. So 2 lakh or half, whichever is lower. In that way also you can remember. And earlier this lesser penalty or this benefit was only for small company and one person company. Now this benefit is also for startup company as well as for producer company. See, producer company also, earlier the provisions of producer company we used to read from Companies Act 1956 because they were not notified in the new Companies Act 2013, but now they have been notified, and accordingly some exemptions have also been given to producer company, okay, because they are related to that agricultural produce. So the penalty for non-compliance of any of the provisions of this act, earlier there was just some specified sections like non-filing of annual return and all. Now any of the provisions. So from start to end, if a small company, if a one person company, startup company and producer company, they do not comply with any of the provisions of the act, straight away half penalty, not more than that. And that too also has a specified maximum limit, 2 lakh and 1 lakh. 2 lakh for company and 1 lakh for officer in default. So very important. Now section 450. Section 450 is again a generic section. The whole act, no specific punishment, you come to this section, section 450. Straight away penalty, company 10,000, further penalty maximum 1,000 per day, subject to maximum 2 lakh, officer in default or other person 50,000. Then section 454, adjudication of penalties. Section 454, adjudication of penalties. A new proviso has been inserted which tells about if the default relates to annual return, financial statements, and such default has been rectified either prior to or within 30 days of the issue of notice by adjudicating officer, then no penalty is going to be imposed in this. So supposedly there is a company does not file its annual return, okay, so it attracts the contravention of section 92, right? Accordingly it has to be penalized, but there is that adjudicating officer who sends a notice to the company to file the annual return within 30 days, and the company within 15 days only files that annual return, then no penalty is going to be imposed. This is to encourage more filing of annual return and financial statements. So now the companies will respond quick to the notices, because they know that if I file within that notice period, I will be saved from that penalty, which is just heavy penalties which are being imposed by the adjudicating officers. So the penalty will not be imposed in this regard, right? Rule 6 I've already told you, and the schedule amendment also I have already told you. So this is the amendment relating to Companies Act. So we are done with the amendments relating to Companies Act 2013 along with the relevant rules. Now the next set of amendments, and first of all we are going to discuss the amendment in SEBI Act. Now in SEBI Act there is just one amendment which is there in section number 12. In section 12, we read about registration. Registration of whom? Registration of stock brokers, registration of the person who are running CIS scheme or sponsoring venture capital. A lot of it is divided into like parts. The section is divided into parts. We have section, we have subsection 1A, 1B, and then a new provision is inserted, which is in the form of 1C. With the only thing you need to remember is that now AIF also needs to be registered. Alternate investment fund, this also needs proper registration, then only it can deal in the securities or likewise. Okay, so a simple amendment. Earlier AIF was not in the purview of registration. There wasn't a mandatory clause of registration for AIF. Now it is so. Okay. So no person shall sponsor or carry, cause to be sponsored or carry on or cause to be carried on the activity of AIF or a business trust according to Income Tax Act unless a certificate of registration is granted by the board. Simple, one very small amendment. Now we switch to PMLA. That is Prevention of Money Laundering Act. We have quite 2-3 amendments in this particular chapter also. The basic ones which talks about the notification. See, government has notified two category of people. What are the two category of people? One is the real estate agent and the other is dealer in precious metals and precious stones. If you can recall about Prevention of Money Laundering Act, what this act is all about, it is trying to prevent money laundering, right? We know exactly what is the meaning of money laundering and all that. Now, when the process of prevention starts, we come to a conclusion that banks or some reporting entities, some so-called reporting entities, can be a very good option for tracing this money laundering, right? So banks or like institutions have been instructed to give or furnish some information to government so that timely tracing of things can be done and money laundering can be prevented, or if not prevented, action can be taken against it, right? So banks are one such category of institutions from which government requires reporting. That is, if I am handling some proceeds of crime, well, at some point of time I will have to inject it in the system to use the money. Where will I use the money? Supposedly I get 20 lakh rupees, and which is not white money, which is some proceeds of crime, and I want to project it as white money because I want to use it. Where will I use it? Well, I can deposit it in my bank, I can buy some property, or I can buy some jewelry. These are the first three things that will come or pop in your mind, right? Now, the government asks such type of entities only to give information, to report. If they find any suspicious transactions, report. That is what the government, by making all the guidelines, is asking the reporting entities to do. Right, so banks are clear ones. Now, in this regard only, government has moved one step forward and government has notified which category of people will be like real estate agents who will be required to report. Which category of people will be considered as dealers in precious metals or precious stones required to report? Like people go on to invest in real estate, people go on to invest in jewelry, right? So a person who is engaged in providing services in relation to a sale or purchase of real estate having annual turnovers of 20 crores or more as person carrying on designated business or profession. When we talk about reporting, we have certain categories. We have reporting entities, then we have, this is the last clause, persons carrying on designated business or profession. So under that particular category, you get these people, right? I hope you are able to recall. See, that is the reason, no, amendment class usually goes on and on and on, because sometimes it's very difficult for the students to recall the provision despite getting that overview. So if you are unable to, then go and revise and then come back and see, okay? So simple, what you have to remember is that annual turnover, if it is 20 lakhs or above, real estate agent. Then when we talk about the jewelry dealer or someone who is dealing in precious metals, if they engage in any cash transaction with a customer equal to or above 10 lakh rupees carried out in a single operation, or maybe they have divided the operations just to be safe from the law, just to evade this reporting, but you can link, it appears to be linked, right? Then that is going to be the dealer in precious metals or precious stones. If you know, the persons are actually prohibited, they cannot accept cash transactions for beyond 2 lakhs, right? So up to 2 lakhs it is permitted, beyond 2 lakhs it is anyways not permitted, right? So if there is any such person who is engaging into any cash transaction with any customer equal to or above 10 lakhs value in a single operation or in different operations which appear to be linked, maybe the person has made different purchases and 1,99,000, 1,98,000 and like amount which somehow comes out to be 11 lakhs, say. So this must be reported. So such person will become a reporting entity. Such person will actually become person carrying on designated business and will be required to report according to the laws to the government the information which is being asked to. Okay. Now, Section 11A, verification by reporting entities. Verification by reporting entities. What do we mean by this? Again, a very simple notification, very simple amendment. I hope you all know about NPCI, National Payments Corporation of India. National Payments Corporation of India is actually a not-for-profit organization, or in common language you can say it to be an NGO. Now this is an NGO which is actually run by RBI and other banks only. What do? They invent things for reforming the banking system. We have IMPS, we have e-Rupee, we have UPI. So this all, you see, it is reviving the whole electronic payment system. Electronic or non-electronic, I'm not confining it to that, because NPCI is a governmental organization only. I wouldn't say it is a non-governmental organization. It is a governmental organization only, yet it is a not-for-profit making entity. Okay, so it is working for a good cause, for actually handling the payment system. Okay, so it is constantly, its constant endeavor is to revive and enhance the payment system. Okay, now what does this point tell us? This point tells us, see, reporting entities, whoever is reporting, whether it's a real estate agent, whether it's a jewelry dealer, or whether it is a bank, anyone who becomes a kind of reporting entity must ensure. See, they ask you, if you go to buy a jewelry, supposedly I go out to Reliance Jewels and I want to buy some jewelry, they will ask for my PAN, right? So they have to verify my identity. They have to verify my identity. They won't report the same unless they become that category of reporting entity, and then they need to report. Also, if I go to bank, they ask my identity. If I go to, so at different places, they need to verify my identity, right? How do they do that verification? They can ask for my passport. Government has prescribed all those things, so you can ask for your passport, you can check for the Aadhaar and like things. Now if you go to a bank, the banks have that special ability to do online Aadhaar verification, which is available only with the banks. No other person can actually go on and do this online Aadhaar verification. But now NPCI have also been permitted to do so. So earlier only banks were allowed to do such online Aadhaar authentication. Now NPCI can also do that. Now a very small amendment in FEMA. We have export of goods and services regulations. If I quickly recall it, whenever a company is exporting something, then they have to furnish declaration in the prescribed forms. What am I exporting? What is the value of the export? Because as against exports, they enjoy a lot of exemptions and benefits. So they need to give proper declaration. Okay, so they have to furnish accordingly, they have to furnish the forms. Now supposedly I am not exporting anything, but there is a dealer who is outside India, and the dealer wants to know or wants to get some samples. So I have to send some trade samples. Now on that trade samples, if I have to engage in so much of compliances, it will be difficult, right? So trade samples are one such thing which are exempted from complying with those FEMA or export regulations, that no, you do not need a declaration for all that, right? It will not be treated as export kind of thing, right? Whenever I am giving trade samples. So we have certain category of light goods which are out of purview of these export regulations, export and goods of services regulations, right? Why? Because it is not possible for every time we are sending trade samples, it is not possible to follow so much of compliance. So in the same category, there was already this existing clause EA, and the same clause has slightly been amended, which tells us we are re-exporting leased aircraft. I imported some aircraft, now I am giving it back. Why am I giving it back? Maybe because of the termination or cancellation of the lease agreement between that lessor and lessee, right? And what has been added, either completely or in partially knocked down condition. I don't know how many of you have seen the movie Bhuj by Ajay Devgan, right? If you have seen, you would probably know that an aircraft can be actually dismantled, although they exaggerate things in every way, but an aircraft can actually be dismantled and then it can be exported. So quite possible I imported an aircraft, now I am re-exporting it completely or in partially knocked down condition. Maybe I have dismantled some parts and now I am re-exporting it. So it is repossessed, it is retaken by that overseas lessor, duly deregistered by Directorate General of Civil Aviation. These are the necessary permissions that you need to take. Of course, I can, if I want to import an aircraft, I cannot. I need to take permission from Civil Aviation, right? So all that formalities, all that legal formalities. Now, either because the lease has been terminated or it has been cancelled, subject to permission of the ministry. Okay, so if this is happening, this is also a case where you don't have to comply with all that regulations. Okay, so without furnishing the declaration, you can do this. Without furnishing the declaration, you can do this. Clear? Okay. Now, FCRA, Foreign Contribution Regulation Act 2010. Now, if you look at the amendments, you will find, oh my God, ma'am, so much of amendments that we have to read. But trust me, the amendments aren't huge, although you might find that it is split into so many number of pages, but they aren't more. Moreover, the whole rules have been reproduced here. Even in your RTP, you will find exactly the same thing. I have just you can say copied, but for a good reason. So complete rules have been reproduced over here. The reason being, there is a slight change in this particular rule, slight change in this rule, slight change in that rule. So instead of noting that particular change in the rule, which is very difficult to understand, the whole rules have been reproduced. So that doesn't mean that the amendment is huge. So it will not take much time. Moreover, FCRA is an easy topic. First of all, you need to create that background for FCRA. We are talking about foreign contribution, and the act which regulates such foreign contribution is this act, right? It is read with the rules. So we have the amendment in the rules itself. What do you mean by foreign contribution? First of all, see, any article, any currency, any security, all that which you receive from a foreign source is termed as foreign contribution. Are we permitted to receive any foreign contribution that we want to? See, FAMA Act and FAMA regulations are different. We are talking about that foreign contribution. Now, foreign contribution, foreign hospitality, in fact, foreign hospitality, you can say by political parties or some political leader. Do you get my point? Are you able to recall everything? I am receiving, or a company is receiving some foreign donation. Okay, I'm receiving some donation from a foreign source. Why will anyone from outside India donate in my company? Why will they do that? Why will they do that? Maybe because they want to create some unnecessary pressure on this particular company, and they want me to engage in some practices which is not permitted by law. Whatever be the reason, what is important is to regulate such transactions, and that's why government wants that without permission you cannot receive such foreign contribution and like things. Even if there is an NGO, we have a not-for-profit organization, not-for-profit company, and someone wants to give us donation, someone wants to give us some article, we have to, if I want to receive this foreign contribution, either I have to get myself registered for a tenure of 5 years, or I can take prior permission from the government before I receive that foreign contribution. The prior permission can be one time, right? So we have different regulations which actually deals with foreign contribution. Okay, now guideline for declaration of an organization to be of political nature, not being a political party. See, if you remember, although this is rule 3, if you remember section 3 also, then there is a prohibition from on acceptance of foreign contribution by someone who is a candidate for election, or someone who is a correspondent, someone who is a judge, someone who is a government servant, right? Now, One such point, if I try to link the same, one point is the political party and other point is organization which has been specified as organization of political nature. So for this we switch to rules. Right? Section 3 tells us that certain people are prohibited from receiving any foreign contribution, in which one such point is the political party organization. Okay, sorry. The organization which has been specified as organization of political nature. Now, which organizations have been specified so? The central government may specify organization as organizations of political nature on one or more of the following grounds. So we have these grounds. The organization specified under clauses 5 and 6 shall be, listen to me very carefully, shall be considered to be of political nature if they participate in active politics or party politics, as the case may be. So these are the points which remain the same. This has been added, which changes the interpretation of points 5 and point 6. How? First, second, third, fourth point remains the same. We will read clause number 5, which tells us, if there is an organization of farmers or workers or students. See, if we talk about JNU, a very popular university and a very popular university for politics also, I would say. There is a lot of student and youth politics which can be found over there. In fact, a lot of leaders can be generated from that university also. Now, if those students are maybe they are engaged in any type of politics like they are opposing something, or they are maybe on a mission, clean this river or cleanliness or anything like that. We see a lot of groups being formed and they are trying to oppose the political leader, or maybe any organization who is adopting methods like this, रास्ता रोको, हड़ताल and like that, right? भूख हड़ताल करते हैं बहुत सारे students. If they are unable to achieve their demands, then they sit on strikes. They go on strikes that we are not going to eat this, we are not going to do that, and it turns out to be really political. But if a foreign source wants to support their cause, they are fighting for a cause. Maybe they want to protect the girl community. So they are fighting for a cause, and for which they are uniting people, or they are engaging in themselves into political actions like hartal and strike and all that. So if there is some foreign source which wants to support them and they want to give contribution, because any rally, any awareness program, it needs funds. The political party also runs on funds, right? So it needs funds, and for that the foreign source wants to contribute. But section 3 prohibits. It says no, you cannot take money from a foreign source since you are an organization of political nature, because government can specify the organization as organization of political nature if it falls under any of the ground. Okay, but now it has been specified that it is important. If we are talking about these 2 points, it is important that either they participate in active politics or party politics. What is active politics? Active politics, directly fighting for election. And party politics, if you're working for some party, so maybe these students are representing BJP. If they are doing so, then they cannot receive foreign contribution. But if they are not engaged in any active politics or party politics, then they are not an organization of political nature, and hence they are allowed to receive such foreign contribution. I hope I'm clear. Then comes Rule 4, speculative activities. Speculative activities. What will not be treated as what will be treated as speculative activities and what will not be treated as speculative activities? This is something that you already know. A debt-based secure investment shall not be speculative investment. Simple, just an add-on, a clarification which is very obvious. Because in equity, we can expect such variations. Debt is less risky and debt is kind of fixed, right? And every association has to maintain a separate register of investments, and every register of investments shall be submitted for audit. Now, the next point, administrative expenses. Administrative expenses. See, before I tell you about this administrative expense and that part, let me actually tell you that this is also something which is not amended recently. This is also something which was available even before. See, if I talk about section number 8, there is a restriction. Even if you are, I hope you remember, we have section 11 and we have section 12. Section 11 tells us the registration part and section 12 is the continuation one, you can say. So any not-for-profit organization, if they are receiving such contribution, they need to register themselves either for 5 years, the registration is valid for 5 years, or you can take one-time prior permission, right? Now, if you are registered, supposedly you are registered under section 12 and then you receive foreign contribution. Whatever foreign contribution you are receiving, you have to utilize it for the same purpose. Okay, you cannot utilize it for speculative activities. What is speculative activities? The meaning is given under Rule 4, and this also you don't need to check. This is this was the same thing, right? So I don't think you need to check this or you need to mark this. Now we come to administrative expenses. We come to administrative expenses. It also tells us that not more than 50% of your foreign contribution should be used to meet out the administrative expenses. Now, what are administrative expenses? That also has been defined in Rule 5. It gives us some additional proviso. What is it? The expenditure incurred on salaries or remuneration of personnel engaged in training or for collection or analysis of field data or of an association primarily engaged in research or training shall not be counted towards administrative expenses. And the expenses incurred directly in furtherance of stated objectives of the welfare-oriented organizations shall be excluded from administrative expenses, such as salaries to doctors of hospital, salaries to teachers of school, etc. See, undoubtedly, when I'm talking about administrative expenses, if you're hiring a staff for management of things, it can be treated as administrative expense. But if you have opened a school and you are paying salary to a teacher, it is your direct objective. That cannot be treated as administrative expense. So that has been clarified through this proviso that on salaries of two teachers or doctors in the hospital, you can pay any amount that you want to from that foreign contribution. It does not restrict the amount, considering it to be administrative expense. Okay. So if you have hired someone who is who you are bearing some training cost, that is also not going to be treated as administrative expenses if it is directly. If you are engaged in an association which is, if you are being hired in an association which is engaged in research and training and you have been hired as a trainee and that expense is going to be borne by the company, So that again will not be treated as administrative expense. Just a clarification. Now, if a person receives foreign contribution from the relatives, then the details have to be given electronically in form FC1, nothing like that. Article gifted to a person for personal use whose market value does not exceed 1 lakh rupees. Earlier it was 25,000. This has also been changed now back. It is 1 lakh rupees. I hope you all know that. Receiving foreign hospitality by a specified category of persons. Okay. Now again, the persons of political nature, they are prohibited from receiving foreign hospitality. If they do, then they have to follow certain guidelines. They have to seek prior permission in case of medical emergency. They can intimate later on. So we have that whole guideline. The only thing is that if you wish to avail the foreign hospitality, you have to apply to government in electronic form. If you look at FCRA, all the forms are filed electronically only now. Okay. Rule 8 does not have any change. Rule 9, again the same thing. If I want to seek registration under section 11, then I have to file a form FC3A and FC3B. FC3A and FC3B. FC3A for registration and FC3B for that prior permission one-time payment. Okay, they both are going to be in electronic form and with affidavit executed by the office bearer. Clear? Now, see, there has to be FCRA account, Fcra account, which we call as, in which you are going to receive any foreign contribution for which you have sought permission or you are already registered, so you can receive foreign contribution. So that will come in that FCRA account only. But that FCRA account is of course in foreign currency. Now, if you want to use this money, as in I want to make payments to this particular vendor here, there. So what I can do is, from this FCRA account, I can transfer to a normal account and I can use this account for making payments and like things. So the person may open one or more accounts in one or more banks for the purpose of utilizing that foreign contribution after it has been received. And whenever you do that, you have to inform FC6D, furnish. Within 15 days of opening that account, you have to furnish it to the Ministry of Home Affairs. That yes, this is the account through which I am utilizing that foreign contribution. Okay. Now, whenever we talk about the registration category, Section 12 registration, a person seeking registration has to meet the following conditions. What conditions? You should be in existence for at least 3 years. You should have spent a minimum amount of at least 15 lakhs on your core activities during last 3 years. Central government may waive condition if they want to. If the person wants inclusion of its capital investment in assets like land, building, etc., in the computation of its spending during last 3 years, then the chief functionary shall give an undertaking that the assets shall be vested with the person till the validity of certificate and they shall be utilized only for the activities covered under the Act. What do we mean by this particular point? See, if I want to get a certificate under Section 12, then I need to comply with certain conditions. Only then I can make an application. What are the conditions? If I am a newly incorporated company and I have been incorporated just for 1 year, I cannot apply because I'm not eligible. I should have worked for at least 3 years. Plus, I should have spent at least 15 lakhs on my core activities. Supposedly, I have spent 7 lakhs on my core activities and I have bought a particular machinery of 10 lakhs. Now that machinery is a capital asset and I want the government to understand that, see government, I have invested 10 lakhs in the machinery and have invested 7 lakhs on my core activities. So 10 plus 7, the total comes to be 17 lakhs. That means I am eligible and I qualify this particular condition of yours. The government says no. 10 lakhs is your capital investment. That is not what you have spent on your core activities. But if you want us to consider the 10 lakhs also, you have to promise certain things. What? You have to give an undertaking that this is going to remain the property of the company only till the validity of certificate. If the certificate is going to be valid for 5 years, it's going to be used only for this purpose and it's going to be the property of the company only. Then we can consider this amount and we can calculate the total and check your eligibility thereafter. If a person is seeking prior permission for the receipt of specific amount from a specific donor for carrying out specific activities, then it has to meet the following criteria. What? Submit a specific commitment letter from the donor. What is the amount of foreign contribution and for what purpose you are giving it. For the Indian recipient persons and foreign donor organization having common members, prior permission shall be granted to the person subject to it satisfying the following conditions. The chief functionary of the recipient person shall not be a part of the donor organization. Condition number 1. 75% of the office bearers or members of the governing body of the person shall not be employees of the foreign donor organization. In case of foreign donor organization being a single individual, that individual shall not be the chief functionary of the recipient person. In case of single foreign donors, 75% of the office bearers or the members of the governing body of the recipient person shall not be the family members or close relatives of the donor. This is just to break all ties and all connections. It should not be a connecting body. It should not be a connecting body. That is the, you can say, simple requirement. Rule 9A, see, if your amount for which you have been permitted is more than 1 crore, it is not important that 1 crore has to be received at once. It can be received in parts also, that is permitted. Okay, but of course there is a condition that supposedly you have got first installment of 25 lakhs. Now you have to utilize that 25 lakhs or at least 75% of 25 lakhs, and after that only second or subsequent installment is going to be released. So you have to utilize, you have to submit the proof that yes, I have utilized at least 75%, and then second or subsequent installment is going to be released. See, there is one clause of surrender. There is one rule of surrender. There is a, yes, rule 15. See, any person who has got certificate of registration may voluntarily surrender the same by furnishing an application in FC 7. Now, if you voluntarily surrender it, supposedly you got that certificate of registration for a tenure of 5 years and after 3 years you voluntarily surrender it. So, your validity of certificate shall expire when you surrender it. That is when your surrender request is accepted by central government. That is the expiry of your certificate. That is the end of your certificate validity. After your registration has expired, it can be renewed in form FC3C in electronic form. Okay, this is something which, okay. The amount of foreign contribution lying unutilized in Fcra account and utilization account of a person whose certificate is deemed to have been seized, if any created out of the foreign contribution, shall vest with the prescribed authority under the Act until the certificate is renewed or fresh registration is granted. This is not so important. Yes, you can read it once. This is all the same. This I have already told you. Intimation is going to be in the electronic form. This also I have already told you. Again, this is going to be in the electronic form. For compounding of offence, you are going to make an application to MHA. For any revision of order, application is going to be made to MHA. The application will be accompanied with 1000 rupees. It is going to be not on any stamp paper, just on a plain paper. Supposedly an authority has passed an order that your registration has been cancelled. You want this particular order to be revised because maybe there is some prima facie error or something like that. So it can be made to MHA on a plain paper with 1000 rupees, and if you want to compound some offence, you have committed an offence and you don't want the trial to happen, so you are ready to pay whatever charges are being imposed on you. So if you want to compound this offence, again an application can be made in such form. This is going to be in electronic form, so you don't need to worry a lot. In fact, the rules given over here, all the rules were anyways not applicable. All the rules, so minute rules, were not applicable in your curriculum earlier also, in your syllabus earlier also. But since in this amendment, in this RTP, so much of rules have been incorporated with respect to Fcra, you can expect some questions out of rules directly, because mostly the sections were important with the relevant rules. So we read the sections along with the rules. But now they have, since amendments have come in the rules, they have emphasized so much on rules also. So especially for the coming examination, you must focus on these rules also. And I have tried to explain or give you an overview at least of whatever is related to the rule. Hope you have understood. And that's it with the amendment part of CA Final with respect to November or December examination. Okay, thank you so much.